Danielle, is there a video explaining your end of day trade setup, how to be confident in finding them? Also in the Mastering the Trade book. Do you have the Mastering the Trade book? It's, and my version is definitely like a little bit different just because, obviously like things change over time. And I have a different grid and everything than what John explained in the book. But the entire basis of the end of day trade is the ticks. So that part of it, um, I learned from John and I learned from the book. When I first started learning from Simpler Trading, it was John that did the close every day. So basically, when I first started learning, I would watch John's session every single day. And then at that time, too, we had an office. So I was learning from John for like 3 years before I started working at Simpler Trading. Um, when I was broke and I would take my laptop when I was working photography jobs and I would sit in my car and like listen to the close when it was either John or Henry. And I would just watch every single day how they managed the ticks and how they managed the close on top of reading the signals in the Mastering the Trade book. So that's initially where it came from. But basically, the idea with the end of day trade is there's this like saying amateurs open the market and professionals close it. The end of day trade is based off of the psychology at the end of the day. You have to think, and this is why we do polls sometimes. You just have to look at the market and see how it traded that day. And you have to think to yourself, what are people thinking? What are people feeling? Is there fear out there? Would they rather get out of positions at the end of the day for whatever reason? Because, they think the market's going to fall the next day. Maybe it's because the market had a huge rally and they want to take profits. Or is the sentiment super bullish and people want to get in, they want to be long, they want to add to their positions before the market closes? That's the entire point of the end of day trade. So you first have to think about that psychology. And sometimes I will run polls in the room to see, where people land on that, because our group is a good representation of market sentiment. So if people are thinking, oh my gosh, I need to get out of my positions, then like the end of day trade is usually a short, right? Um, but the basis of it is watching the buying versus selling pressure. So that comes through the ticks. Um, when I'm looking at the ticks, I'm looking for consistency in the ticks. I want to look at the half hour mark going into the end of the day. The other guys, they will do their trades earlier. For me, it just doesn't really seem to work out very well for me whenever I do the trades earlier. I know Henry and John, like a lot of the time, they'll do them like an hour and a half before the market closes. I have not had a lot of success with that, so I pretty much always wait until the half hour mark because that's what I'm best at. And the reason for that is because I'm looking for strength, I'm looking for volume, I'm looking for consistency, and that's when the volume usually really comes into the market. So you first have to take just an understanding of what the market did that day. So for today, for example, the market's up, nice bullish day. And you have to think about too, like what day of the week is it? What's happening this week? Today is a Wednesday. Tomorrow is Thanksgiving. The market's going to be closed. The market is going to be closed half a day on Friday. Like these things are very important because if it's a Monday versus a Friday, like it does make a difference. So you just have to think to yourself, okay, tomorrow's a holiday. Do we think people are trying to lighten up their positions going into the holiday weekend, or is this like a max bull situation where people want to be long in case there's a big gap up on Friday? Like those things matter, right? So anyways, you just want to look at the overall trend. You want to look at where you are in the day. Are you at the highs on the day? Has it been a choppy day? Are you at the lows on the day? Um, so take those things into consideration. It's more difficult when you're at the exact high or you're at the exact low because you're going to be, in that case, potentially buying the high on the day or potentially selling the low. However, I will do it um, if the market internals can confirm that price action. So I take the sentiment into account. I look at the overall trend on the day. And then after that, it's all about the market internals. So even though you want to think about the sentiment, you don't want to allow that to completely cloud your judgment. You want to look at the market internals and read what they're saying to you and follow that. So what that means is that even if I have it in my mind where I'm thinking, the market's really strong. People are buying the dip, shorts are covering. Things look really bullish here. I feel like the market is strong, it's recovering well, and I have a bullish sentiment in the market. That is important, but the most important thing is the market internals. Because if suddenly it hits 2:30 Central Time and you hit negative 600 on the ticks and the ticks are hovering at negative 600 and they're consistently staying there, it does not matter how strong you think the market is, like the end of day trade is a short. Does that make sense? So, um, if there's no consistent pattern, for example, like today, there's really not, I mean, the ticks have been stuck between negative 600 and positive 600 since pretty much the entire day. However, the ticks are mostly above the zero line. So for today, the ticks are mostly above the zero line. However, they're not demonstrating, plus 600, plus 700, plus 1,000. That's going to be extreme buying. Anytime there's consistent ticks up above the plus 600 into the plus 1,000, that's one of those situations where I'm like, just buy it, buy it, buy it, buy it. I don't care if it's at the high on the day, I'll still buy it anyway. So that's really important. And the same thing goes for the lows on the day. There will be times where you will see me short the lows on the day. And it's one of those things where it's like, you're not really supposed to do it, but if the signals are aligned, like, why not? So I will absolutely short the low on the day if, for example, like, let's just pretend we were sitting right here at 6,800 and it was 2:30 Central Time. I love shorting breaks of critical support. So the low on the day is a critical support zone. A key psychological value like 6,800, anytime a value like that breaks, there's a lot of stops at those levels. So you can generally get like a pretty good short and a quick flush on those kind of levels. The same thing goes for upside. So like let's pretend, in another hour we're sitting right here at 68.47 and it's like, oh, I don't really want to buy the high on the day. Okay, but if plus 700 comes through on the ticks and the vol spread's trading higher and the VIX is going lower, like who cares? Buy it. Because if it breaks through that high, that's the resistance zone and it's a key psychological value. So if it breaks through that level, that's where it rips. So I love trading the end of day trade when you have a major break of resistance to the upside or support to the downside that is confirmed by the market internals. So confirmed means if it is a bullish trade, we have consistent and regular buying price action of the ticks. The vol spread, the vol spread is a really, really great signal. Yesterday, the best signal was this right here. So whenever you see a wide range expansion candle in the vol spread, that's absolutely one of the best buy signals, and it always happens right before the indexes take off. So yesterday, this was a signal for the buy. That was exactly where I put my trade on. So you see how small these candles are? Small candles, small candles. And then do you see how this candle is really big relative to these candles? So what that is that's just a huge influx of buying coming through directly at 12:30, which I'm in the Pacific time zone, so 12:30 or 2:30 Central. Um, so that right there was the buy signal yesterday. That happened before the indexes started moving, and that was the very second that I was trying to get into my trade. Then the other one that comes in right at the very end of the day, that's called the 252 trade in the book. That same thing can happen right at the very end of the day. So there was a huge buy signal right here. Boom. Um, So, anyways, those are some pretty good signals. If we go back and just look at like the bearish days, so you see this right here. You see how the vol spread was going higher, going higher, going higher, and then you see how it just dropped off a cliff. So that's a short. Um, this is definitely a day where it's a short because you see how the vol spread tries to get going and then it just rolls over. Tries to get going, and then once you see it starting to roll over, like that's a short. Short it, short it. This day right here, this is more of a choppy day where it's like it's up and then it's down and then it's up. So that might have been the day that we did the iron fly. I'd have to go back and look. But anyways, when the vol spread looks like this, it's just like a perfect trending day. However, if it starts like falling off a cliff, then that's when you know it's one of those days where even though we've trended higher the entire day, the end of day trade is a short. Because you just have to think about the psychology involved. Yeah, the market looks great, it's bullish, whatever, but maybe people want to take their positions off before the holiday weekend. So it can still be an end of day short when you have a strong bullish day. You know what I mean? Um, so yeah, this is the vol spread on the 5-minute chart. This one's a 3-minute chart for the ticks. My put call ratio is an intraday put call ratio. Um, John uses like the swing version. I personally really like this one also. Just because it shows you what people are doing during that session. So like yesterday, for example, the put call ratio spiked up, but then you had short covering, short covering, short covering. Today, what's really interesting is that the put call ratio started off really low because, you know, people are getting long as the market breaks out. But what's interesting is that it looks like people are coming in and buying puts as it's going higher. So I think that's really good for the rally because, you know, you need two sides of the market for the rally to keep going. And if the market's just stuck down here at 0.48, that's when the rally goes to die. So I think that's good for upside pressure. Like this day right here, this was a day where people start out long, but then we're buying puts, buying puts, buying puts, buying puts, buying puts, buying puts. So that set up the stage for the short covering rally. So I don't know. I like that one. That one is different from what John talks about since that's just something that I don't even remember where I initially came up with that one. I think it was from Neil. And then the VIX. The VIX is really important for the end of day trade because the VIX and the vol spread usually lead. So we watch these as leading indicators before the S&P and the Nasdaq futures move generally. So if the VIX is making new lows, it's pretty much a long. If the VIX is not really moving, it could be a neutral end of day trade. If the VIX is spiking, it's usually a short. For something like today, it's just, continually been going lower all day. It's, bullish day. So with all of that being said, for the end of day trade today, it's too early for me to make a determination because I need to see the end of day buying or selling pressure. But it's between a couple different options right here, which is if we break the high on the day with consistent high ticks, that's where I would look for an explosion to the upside. However, I think it's probably a little more likely that we don't make it through resistance and people take profits, just because, like I said, holiday weekend. But I mean, I don't really care. Like, I'll trade it whichever way it goes. I do get an idea going into the end of the day, but ultimately it's just reading the direction. Does that make sense?